Well, the sign is up, the front door's open. It's time for our own open house. Each week, I'll be joined by the country's leading real estate experts with their thoughts on the market. Now, this is really timely advice for anyone out there who might be looking at purchasing, selling, maybe investing. And if you've got a question for Peter O'Malley, by all means, jump in right away. 131 873. Peter O'Malley is a consultant with Harris Partners, and he joins me on the line right now. Afternoon to you, Peter.
Good afternoon, Chris. How are you?
I'm very, very well. Interest rates have been cut to a record low, and we're hearing from the RBA, as I mentioned with Peter Switzer earlier today, that this is likely to stay that way for 3 years. Now, what will that mean for property prices as we head towards the end of 2020?
Chris, I think the rate cut that mattered actually happened in March when they cut twice by 0.5% in total. This cut this week, whilst it will be welcome and it will support the market, I'm not sure that it's going to have a stimulating effect like other rate cuts because clearly we're not in normal times.
Right. So you're saying that 15 basis points is nothing to get excited about. That's the way the big banks reacted too, didn't they?
That's right. Look, I think this was very much about supporting household budgets and supporting mortgage holders rather than using it as an inducement for people to come into the market. The interest rate cut that we saw that changed people's perception towards property was that 0.5% cut in March, Chris. And if that didn't happen, that was such a well-timed and courageous move. If that didn't happen, it would have been bad news for property.
Yeah. What do you read into the fact that Westpac and Commonwealth cut their fixed mortgage rates? ANZ cut its lowest fixed rate. They didn't touch variable.
Look, I suspect that they're thinking lower for longer, but they're hedging their position is what I'd say, being bankers and all. But I think that the banks have been extremely accommodative right through COVID, and they know they have to be because whilst a homeowner might have the percentage of their wealth in their home, Chris, the bank's value is in the housing market collectively at large. They're the largest stakeholder and they're at the table. They can't walk away. A homeowner can sell their property and go into the rental market, where the big four banks, they're at the table and they need to continue to support this market.
Okay. You've been looking at the apartment market and there's some worrying signs for investors and developers.
Chris, anything that is high-rise, generic, in suburbia and or poorly constructed is under real pressure. So I've spoken to real estate agents right across Sydney in the last 2 weeks, and they're all reporting the same thing, is generic high-rise apartments in suburbia are really struggling, whereas they can't get enough housing to sell and they can't sell it quick enough. So quite clearly, the buyers in the market seem to be very much interested in houses over generic apartments. I think we're suffering from dwelling oversupply with all of the development and construction.
You and I said that 12 months ago, didn't we?
Absolutely. It was on the agenda and it's playing out in the market at the moment. It's been exacerbated by the international borders being closed at the moment.
Yeah. I imagine there'll be plenty of bargains, though, for first home buyers. They've got some very generous offers coming through from those stimulus packages from the Treasurer. And so they'll be willing to get into the market as soon as they can?
You would hope so, Chris. These are the best buying conditions for first home buyers since the GFC in 2008. In 2008, the RUD First Homeowners Grant stimulated a wave of first home buyers. In the markets that we operate in, I have to say, though, we're not seeing a wave of first home buyers. I don't know if that's they're nervous about the market, they don't want a mortgage at this time, or they've got employment concerns. But yes, conditions have finally turned in favour of first home buyers, but for mine, they haven't responded yet.
If you're looking to sell a unit, would you think, based on what you've just said, would you hold on for a while?
Look, if you have to be very realistic about what is happening in the market and then decide whether you're a long-term hold or a short-term sell. I think anyone who's holding an apartment at the moment thinking they might put it on the market next year, I would encourage them to go now. The one type of apartment that seems to be performing well across the city, Chris, is anything that's unique and with special features that appeals to baby boomers. Baby boomers that are selling the family home and moving into an apartment are sort of dropping down in price, and that's what they're looking for, a view, an outlook, a waterfront block. that sort of thing. So it depends what it is that you've got to sell.
Right.
But if you want to sell, I don't see a case for holding much longer unless you're a really long-term play.
One of the interesting moving things that has occurred during the pandemic is the fact that people are renovating a lot. Home improvements very much on the rise because people had the time to consider them. They've saved money because they haven't been out and about, so they've had the money to do them. But roughly how much should we spend? Because quite often people will not do enough or do a little bit too much. What is just right?
If you're selling your property, we often encourage people to think repairs, not renovations. Given build costs and renovations are so expensive, it's very hard to open up the yellow pages, so to speak. Not that anyone uses the yellow pages anymore. Call a builder out, pay retail cost on the renovations, and then profit on those renovations immediately after through the sale. Whereas when you come to floor sanding, carpeting, repainting, superficial cosmetic renovations that don't cost as much as structural renovations, you can profit on those.
Yeah, right.
And the best thing to do before undertaking large-scale renovations is to call a real estate agent in and say, if I spent $200,000-$300,000 renovating our house, would I add more than $200,000-$300,000 value at the other end? And I've got to tell you, Chris, in 80% of cases, the answer is probably not.
Right.
And then you need to decide whether it's better to renovate and overcapitalise in the short term or sell your existing home and buy a new one that is renovated.
Someone told me, a counsellor once told me, it's quite often a clever thing to do to get approval for plans to renovate, to put a granny flat in, to put a patio in and leave it at that, then sell, because then you give a potential buyer an idea that has already been given the green light that they can consider, and it doesn't cost you as much.
Indeed, and in a lot of these councils, as you'd know, Chris, getting approvals is not easy. It's easier said than done.
Yeah.
So I always advise people that if they do get a practical and functional DA approval on their property, they then have given the property an additional asset, but being the DA approval, because there's a lot of people and a lot of builders as well that would be happy to renovate, but they don't want to deal with the local council because it's just too hard.
Yeah. All very interesting and some wonderful, wonderful advice. Peter O'Malley, thank you. Have a great weekend.
You too. Thank you, Chris.